Boom! What's going on, Investor Maniacs? Your boy, Knight Rider here, and today we're going to be talking about two American retail giants. Maybe giants like a slightly large word to use, but some big old companies familiar to anyone who has ever been inside a mall. So some of y'all Gen Zers out there, you might be hearing this for the first time. You're like, the mall? What's the mall? We're talking about Kohl's and Macy's. Let's start out with Kohl's. Kohl's is a department store chain and a great American success story. The company started in 1927 as a corner grocery store owned by Polish immigrants and exploded over the next several decades into one of the biggest retailers in the country. Kohl's today is a great all-around retail store which sells affordable clothing and affordable accessories. It's a mainstay of the American retail market with over 1,000 stores and over $20 billion in annual sales. Now, retail is a tricky industry to invest in currently because the overall industry is going down, but there are little bits and pieces which are actually going up, primarily the discount chains, although Kohl's is experiencing some problems right now. Retail is supposed to be a stable business in principle, and historically pre-internet it has been. I mean, people are always going to want affordable clothing and home products close to their home, right? On the other hand, the rise in online shopping is killing companies who are slow to innovate and adapt to the digital marketplace, where now convenience means having something delivered to your door in 1 or 2 days. Many retailers like Nordstrom and Gap have faced significant challenges over the past several years. Kohl's has overall continued to grow thanks to its focus on affordable goods, its coupon program, which people who don't have a whole lot of money, they love them coupons, even though they don't really make any sense and they're like expensive and they just make things more expensive. It'd be cheaper just to not have coupons at all. But I don't know, why can't I say people who don't have money, they love seeing discounts, they love seeing coupons. It's just, I don't know, their brain doesn't really comprehend that it's all the same thing at the end of the day. Anyway, its most recent partnership with Amazon, which I'm sure some of you guys may be aware of, that's not exactly new news, but they're still rolling that out into new stores, and that is equating to more foot traffic in the stores where it has been implemented, and we should assume will equate to more foot traffic in the kind of additional stores that it's going to be rolled out to in the near future. Now, revenue has taken a bit of a hit recently, down 2.88% this most recent quarter. But to put that into context, so our trailing 12-month revenue is $12.1 billion, and that's down from $12.23 billion in 2019, but that's still up from $19.1 billion in 2018. So yes, we have seen some short-term weakness in revenue, but again, let's put that in context. We're still up from where we were just a pretty short period ago in 2018. But as retail is a pretty low margin business, that small amount of revenue shrinkage is going to result in a more significant earnings per share shrinkage, which it did. So earnings per share was down a quite significant 15.6%. Surely the stock deserved a lower valuation after the recent weakness, but I think the stock has overshot to the downside. Kohl's is now trading at a mere 10 times earnings with a massive 5.64% yield. I think that represents a buying opportunity. I think the continued rollout of the Amazon return partnership will help drive foot traffic in those additional stores, and that will also help sales, which will then disproportionately help earnings per share. It will also increase the probability that if Jeff Bezos wants to buy a department store to help increase Amazon's footprint, which we already know they're willing to do since he bought Whole Foods, Kohl's will be high on that short list of candidates. Do not be confused. Kohl's is no growth stock, but it's a cheap stock with a huge dividend with only a 52% payout ratio, and it is positioned to be one of the better performing retailers in America. I think Kohl's is a buy. Up next, we've got Macy's, another large American retailer. Macy's itself is a massive department store chain, but Macy's Inc. is even bigger, and it includes iconic brands like Bloomingdale's and Bluemercury. Macy's currently controls 870 stores and generates nearly $25 billion in annual sales. Like many of its competitors, Macy's has been hit hard by the e-commerce boom. Barron's recently declared Macy's as one of the worst stocks of 2019. Ouch. Perhaps the most damning evidence of a decline was the weak holiday sales performance in the winter of 2018. That saw a less than desired 1.1% increase in sales during the busiest, most important season for department stores. To put this in a little bit of context, remember a 1.1% increase is actually a 0.8% decrease after inflation. The sales disappointment led to a dismal performance of Macy's stock at the beginning of 2019, with historic lows reported in January. Yes, the stock is very, very cheap, much cheaper than even Kohl's, trading at only 6 times earnings and a 7.1% dividend. However, I am more concerned about Macy's turning into a value trap. To me, the big problem here is where Macy's is putting its emphasis. Unlike Kohl's, which is increasing its e-commerce efforts and creating strong partnerships which will increase foot traffic, Macy's seems to be fighting the decline of traditional retail with more traditional retail. Last year, Macy's invested around $200 million into renovating its stores, which isn't bad for the shopping experience, but ultimately feels like money thrown in the wrong direction. Two things are working for this economy, for brick and mortar retailers. We have the discount stores like Dollar General, Dollar Tree, Five Below, Ollie's Bargain Outlet. Those types of stores are working. Also, the ultra high end is working. Think the beautiful numbers recently put up by RH, formerly referred to as Restoration Hardware. The problem with Macy's is it lives somewhere in the middle. It's not a discount retailer, but it's not a high end retailer. And that middle ground is not working in today's economy. I say stay away from it. Hey guys, here is my portfolio. For full disclosure, guys, I am doing my best to get content out there. I really appreciate the support. Thank you very much, and may the market be with you.